All right, everybody. You are joining me in a new location today. We're out in Palm Springs doing a little R&R, and by R&R, I mean everyone's by the pool, and I'm working and thinking about mortgage rates because I think about mortgage rates a lot, especially recently. So what I have planned for us today is a meeting with Julie Aragon from Aragon Lending. She is a prolific lender, super knowledgeable, and is going to talk to us a little bit about what's going on right now, what is happening in April 2022. We're going to give you a mortgage rate roundup. Before we get to it, let's like, subscribe, comment, ring the bell. Let us know what you think. We got a lot of this coming. There's a lot of interesting stuff on the horizon with mortgage rates and what that means to you as a buyer and as a seller. So let's hop over to our meeting, say hi to Julie, and hear what she has to say. Welcome. I want to introduce everyone to the page, to the extraordinary Julie Aragon. Julie, can you tell us who you are, what makes you great, and then I'll fill in all the blanks.
Yes, thank you, Josh. Thanks for having me. So I am a mortgage broker. I've been doing loans this is my 20th year. And what makes us great? I think just very approachable, kind of, we're, like you always say, just very knowledgeable, approachable, and try to make it fun because really, the house shopping is fun, but how you're going to pay for it, it's not always so
It's
fun.
usually not a lot of bells and whistles and sparkles on the lending side, but
we try.
I can say without any uncertainty, you bring the most colorful follow-up and maybe single-handedly keeping Drizzly in business.
Right? We like booze around here.
We do. Just anything to take the edge off because we all work 7 days a week.
Yeah.
The purpose of this video is I wanted to do just sort of a fast and dirty market recap. What's going on April 2022? Rates have been increasing. People are getting nervous. We don't have crystal balls, but we don't have a crystal ball. But you are in the trenches every day. You've been doing this for 2 decades. Can you talk to us a little bit about what has happened the past 6 months, what's happening right now, and then what do you think is going to happen over the next 6 months?
Yes. Okay. So 6 months ago, rates were low threes, 3.1-ish. And this time around, Josh, they went up and they went up fast. Now we all knew it was going to happen, right? We knew Fed was going to stop buying mortgage-backed securities in March. We knew they were going to have to raise rates, but it came really fast. So rates went from 3.1. Today we're hovering right around 4.8. Now this is the Fannie Mae 30-year fix, right? So 2 points.
So let's put the projection up. We have a few projections from you. The first one I want to put up, I was actually going to question some of these projections, but you're saying right now, because I was going to say that the rate for April 2022, you have here at 4.875. You're telling me that the 30-year conforming rate for like the Fannie Freddie rate is 4.875 today?
Yeah.
That's
now, if you're
bonkers.
jumbo rates might be lower, maybe 4.5-ish today. Now, not everybody qualifies for a jumbo loan, but yeah, Fannie Mae almost 5% today, so almost 2 points higher than we were 6 months ago.
So what does that mean in terms of cost? Had you been one of those people who stood on the sidelines being like, I think there's going to be a crash.
Oh, I know. And it breaks my heart for them because, we were saying this in the fall, like, don't wait, rates are going to go up. And, I had a client who first time buyer got under contract. There was a few wonky things about the inspection, but I said, no, he was locked at 299. I said, dude, buy this house. You don't understand. And we check in with our clients every couple of weeks, make sure they're still, they have what they need. But it's a shame. So 2 points, but if you look at even the last 30 days, right, rates were in the low 4s 30 days ago, and now we're pushing 5. So they're going up. Fed raised interest rates last month, and they're expected to continue raising them throughout the year to get a hold of inflation.
I actually closed on an SBA loan. We closed in December. The structure of our loan, the SBA floats until February, which it went up 0.5 point, and I was furious. You know what it's at today? 2 months later, it's gone up over a point, almost 1.1 since mine went up. So I think we were at 3.1, and then ours ended up closing at 3.59. Today, I was 4.68.
Yeah, doesn't that 3.5 feel like a steal now?
I know. I'll tell you what. It certainly takes the edge off, no doubt about it. So let's talk about, had you bought October of last year, your rate was 3%, maybe close to 3.1, depending on where you were at. Your annual principal and interest, $40,000. And I think depending on the market you're talking about, some of these price projections on that top line, those green numbers, the 3.76%, 7%, and 10%.
Yeah.
I think those are even conservative.
Oh, totally. I know. Especially
in Los Angeles. In Long Beach, we are doing some business in Long Beach. You're the queen of Long Beach, so we had an offer in for $1 million on a home in a part of town that there has not been $1 million sale, and we didn't get it. So prices are increasing. I'd say in the past 6 months, there are parts of Long Beach 6 months that have gone up 10%.
Oh, easy, yeah,
maybe more.
But, well, at least we'd be conservative with this graph, and I think because it's not just interest rates going up. So it's the appreciation. I've lost that. I've lost the principal reduction because, if I wait a year, how much have I, lowered my balance? It's a tax deduction. I mean, it's a lot of things that go into the cost of waiting. Yeah.
And your down payment goes up.
It all goes up.
Everything goes up. If you're looking at a $200,000 down payment and the property goes up 10%, that's a $220,000 down payment. And
appreciation, most times, exceeds our ability, it outpaces what we can reasonably save, right? So we're just constantly, trying to save more money, houses go up.
Not to mention and I've been saying this a lot recently, the hedge against inflation. If you'd bought 6 months ago, I have some clients who locked in rates in the 2s. They almost don't care what the house is worth because they're like, I'm paying less than a lot of people are paying in rent to own my home.
Oh God, rent has gone up 20%. Year over year. So it's not a picnic to rent. And inflation, you bring it up. I actually love this topic because, it's like, I feel like all of our parents are like, oh, when I was, when you were born, I was paying 18%, right? So I was born in 82 and rates were higher then. Well, why were they higher? Because in the late 70s, inflation was out of hand. And so what happened? Paul Volcker came in and he raised the Fed funds rate. He had to tame inflation. And then that led to a recession. And then interest rates dropped and there was a refi boom. It happened again in the 90s, late 90s with Alan Greenspan. So it's comforting to look at history because if you see the Fed's policy, what their job is to kind of give us our medicine, right? So right now we're high on our own supply, right? They shoved all this money into the market, right? $3 trillion. I read 50% of the money out there was created in the last 2 years. You can't make all this money and there not be consequences.
That's an amazing stat.
What happens? We know that the Fed funds rate has to go up. Well, then that's got to mean interest rates go up because why would I want to buy a mortgage bond if the value today, it's just inflation is eroding the value of that investment. You're going to need to offer me more money to get me to have an appetite for that kind of investment. So mortgage rates are going to go up, which is almost certainly going to lead to to a recession. Okay, so that happens, and then what should happen, if we look at history, is rates will go down. So when I'm talking to clients, it's like, okay, let's get in where you fit in, right? You can afford this payment now. You can lock in this price, start building equity, and then when rates drop, we'll refi.
But at this point, rates aren't in the 7s. They're not in the 6s, and who knows when or if they'll get there, on a short time frame. But rates today are still reasonable.
Right.
I think we've all been spoiled over the past couple of years in the real estate industry. Yes, the pandemic has been very, very difficult, but for people who've been buying and selling property, it's been very good financially. Especially people who've been buying property. Actually, for both, because people are selling property for a lot. But I think that our frame of reference is a little skewed because we're not looking back to what the last 10 years held. I bought my first property, my rate was 4%. And I was bummed then because I was like, oh, a month ago it was 3.75.
Yeah.
But that quarter of a point on my first property, I don't think about it now because I bought it then. I've had 10 years of appreciation and having just locked it in, had my pricing fixed, and pretty much the only thing that fluctuates because it was a condo is the HOA has gone up a couple times. But even today, you're still going to be getting a pretty solid rate if you look at, the past 20 years where rates go and odds are where they're going to be in the next 20 years. Would you agree with that?
Totally.
what advice are you giving people who are like, hey, I'm thinking about buying, but I'm not sure? Because I have that conversation a lot. I would love to hear what you tell people, because you're also on the front lines there.
Yeah, well, I mean, so when people come to us and they're thinking about buying, we like to do a rent versus own analysis. So, we have some people renting Santa Monica, rents easily, $3,800, $4,000. And then we'll show, okay, well, if you purchase, what's your monthly payment? Generally, it's usually higher, but then we'll break out, okay, well, how much of that is principal reduction? How much of that, usually those people are in a higher tax bracket, and we expect taxes are going to go up too. So how much of that is a tax deduction that you get back? And what's your net cost? Because when you look at it that way, it really makes that higher payment, maybe going from $4,000 a month to $6,000 a month, easier to swallow when well, $1,000 a month it's a forced savings, right? In a way. Mm-hmm. Now, home equities, and that's 100% safe, but come on, over time, always goes up.
In Los Angeles.
Right. And then when you have that tax deduction, it makes the numbers, it's not that high, and your rent goes up. And like I said, Santa Monica's rent control, but not every place is. And so rent's going to continue to go up as well. And then we'll go over the lost appreciation, all kinds of things to depress you. Or encourage you to make a move.
Yeah. I mean, it can be a tough pill to swallow, but if you're analytical about it and you really say, like, what does this mean for my personal financial picture over the next couple of years, rent versus own, especially, I'm break even at the very least, very early on. And then once you look at all the money that you're putting back into the equity of the home, once you look at the tax savings, and then appreciate, hypothetical, but pretty reasonable to guess that you'll have appreciation on top of it, it starts to make a lot of sense. So one of the things that I tell people is, if you can afford to buy a home, buy a home. Then buy a second one, then buy a third one, then buy a fourth one.
Yeah, and investment property too, right? So I've had clients, longtime clients, that have, one gentleman has been telling me, I feel like for at least 7 years, Julie, prices are too high. I'm waiting for it to crash. Like, dude, if you would have just bought 7 years ago, but then also we're talking to other investors. I have a client right now who was about to put $1 million down on his mortgage. He's like, I just want to pay it down. And I said, no, you're not going to do that. Then it's trapped in the home and it's just lazy equity, right? But if we can show him, okay, buy some investment properties and have your tenants pay that off. Now you've got the tax deduction, the appreciation, all of that. And, you put 25% down and you're appreciating $1 million asset. I mean, it's a no brainer, but sometimes it takes a few conversations to, kind of wrap their head around.
Sometimes people have to see it in writing and hear it from a professional who knows what they're doing. Which also, I do want to sort of speak in some generalities. There are a lot of loan officers out there and mortgage brokers who don't know what they're doing. They have an understanding of the mortgage process, but it's a very different thing to understand every single buyer's needs and to be able to help them strategize. Because though we are not financial planners, people come to us for advice for very big financial decisions. And one of the things that I love about you and your team is I feel like you take a very holistic approach to every single client that you get. Because I know I give you all sorts of clients, and being able to pivot and service different people in different price ranges, different occupations, it's a skill set that not everybody has. So thank you.
I'm glad to hear that. And then also, Josh, one thing I want to talk about is going forward, right? So
yes,
interest rates are expected to continue to go up throughout the year, like I mentioned, but when we go into a recession, when they come down, what I would do now for the people buying, I would encourage you not to pay points when you can. Because I've got some competitors and I see their loan estimates and when clients are shopping and it's like, whoa, you want that 4.5, but you're paying how much to get it?
Yeah, you're paying $9,000 to buy down a quarter of a point.
Yeah. And you may not keep that loan because in 18 months, we might have an opportunity to lower the rate and that money's gone. So I would say, unless we've got some extra credit from a seller, which it doesn't happen much these days, there's no reason to...
I get some credit.
Unless you work with Josh. But I wouldn't go spending a whole lot on closing costs in terms of points in this environment.
That's a really good point, and actually something I haven't thought of. So sort of in simplest terms, like for people who don't get the minutia, one of the things that you can do when you're closing your loan is you pay a little bit more at closing, and you're sort of allowing the bank to relax a little bit in terms of their risk. So they say, okay, you're giving us a little bit more money. We'll let you buy your rate down. So that when we say buying points, that's what points are. You pay a certain percentage of your mortgage to drop the rate down an eighth, a quarter, what have you.
Mm-hmm.
And it can start to get pretty expensive. And some people do it because they like to be able to say, oh, I got this great rate. And actually that's one of the things I was saying about some other lenders and loan officers I've worked with. I've had some inexperienced buyers who come to me after they've gotten their pre-approval, and I have to talk them out of using like the family friend or whatever, because I look through their sheet. I'm like, oh, that's an amazing rate. It's going to cost you thousands of dollars to get that rate. And the mortgage broker didn't explain that clearly. And I love that you guys never do that. It's the thing I loathe, like the secret points, and people give the flashy teaser rate. It's like a toenail in the soup. Like, come on, you didn't have to do it.
Yeah, right.
All right. So we've talked about what has been, we talked about what's going on. We've talked about like some general projections. Let's try to make some legit predictions right now. Next 3 months, what do you see is going to happen with rates?
My projection is rates are going to go up. I'm not a betting woman, but I would say at least a half. If I had to take
a half.
Oh yeah.
So you think we're going to be? You think by, let's see, we just started Q2. By the end of Q2, by Q3, you think rates are going to be 5.5. Let's hedge a little bit. Let's say 5 and an eighth.
All right.
Oh, let's make a bet. Okay. Start of Q3. Yeah. Over under 5 and an eighth. You're saying over?
Yes, over.
I'll take the under. What do you want to bet?
The winner buys the other cocktail of the month.
Love it. All right. Virtual shake.
Wait, no. I said that wrong.
Oh, wait. No. Yeah, we're on the same page. The loser, the person who's wrong. Oh, I should have, because I have a feeling you're going to be right. So 5 and eighth, over and under. We'll check back Q3, hold you to it, and then it has to buy a year subscription to Cocktail of the Month for the winner.
Yeah.
Is that the deal?
Yeah, let's do it. Yeah.
All right.
All right.
You know what? Everybody saw it. I've just been swindled. I'm not a betting woman, but
yeah.
Good to see you. Thank you so much for doing this.
Yes, thank you for having me.
All right. Well, that was super informative. I, of course, really nerd out about mortgage rates and financial projections, but I hope you found it at least half as interesting as I did. Julie is really, really great at what she does. I wasn't joking. I talk to her almost every day, and she always has an interesting perspective and some really insightful thoughts on lending in the mortgage process. It comes from experience, and I think really loving what you do. So our conclusion from the video: rates are definitely going to go up. We believe that. The writing is on the walls. They've already gone up a lot. So if you wait, you're going to be paying more for the same thing. Rates going up and properties appreciating means buying a home is going to get more expensive. So it can be scary to pull the trigger, but make sure that you enlist professional lender who really understands your situation, and professional and sophisticated real estate broker to represent you on your purchase. It's a jungle out there. It's hard to get offers accepted. You can check out our video on what happens with the bidding wars. You win some, you lose some. But if you go in with a good strategy, hopefully you win more than you lose. Now, we're gonna have a lot more content with market updates as we track what's going on with mortgage rates. Julie and I are gonna talk about financing for investment properties. A lot of good content coming your way, but you'll miss it if you don't subscribe. Make sure you subscribe, make sure you like the videos, send us questions, write some comments. We'll get back to you as soon as we can. We love the engagement, and thanks for stopping by. We'll talk to you real soon.